Hey guys, welcome back to the channel. The Bank of Canada just made its largest rate cut since 2020, 50 basis points. We're going to talk about what this means for the Vancouver real estate market. We're also going to touch a little bit on the election. By the making of this video, we still don't have the election results, but I want to talk about what we could see policy-wise moving forward. Real quick, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. When I'm not making videos like this, I'm helping people just like you buy and sell real estate across the Lower Mainland. So if that sounds interesting to you and you want to chat with me about your situation one-on-one, you can book me for a free call in the Calendly link below and on screen, and subscribe to this channel so you don't miss a future video. All right, I hope you had a wonderful week. We're gonna hop right into this as we usually do. 50 basis point rate cut by the Bank of Canada on Wednesday. Widely expected. What is this going to do for the Vancouver real estate market? I'm going to talk very quickly about mortgage rates and what's going through a lot of buyers' minds right now, especially after this rate cut. I've noticed in my world, and I speak with agents all the time, of course, most of the busier agents out there, the ones that do a sizable amount of deals or a good number of deals, they are noticing that things have picked up, including myself, over the last 3 to 4 weeks, or 2.5 to 3 weeks sort of thing, where we've had, a lot more buyers reach out for consultations, a lot more showing requests on listings, a lot more overall conversations for myself who I meet a lot of my clients through this channel and also through other social media channels. I have a lot more people messaging me on Instagram and on TikTok and Facebook, just, asking questions about the market. Is now the time to get in? And so I think coming into this rate cut, this rate announcement, again, it was widely expected that it was going to be larger than a 25 basis point cut. And we had a 50 basis point cut as expected. On the rate side of the equation, the mortgage rates, I had talked about in a previous video how fixed mortgage rates, they are based on a future expectation, right? So the market typically will price these into the rates in terms of what they expect is going to happen in the future. And because 50 basis points was widely expected, we haven't seen any movement, maybe a little bit of movement in the fixed mortgage rates, but not much at all. So the fixed mortgage rates, they stayed the same, when you would think that with this 50 basis point cut, those fixed rates are going to come down. But what does get affected by a rate cut, any rate cut, is the variable rate. And so the conversation that I'm having now with clients, and I've been having it over the last week to 2 weeks, is, are we heading into the territory where it starts to make sense to go with a variable rate over a fixed rate? Now, the reality is, I can't give blanket advice because everyone's situation is different, but typically how it works is if you believe in the future that rates are going to come down further and you're not opposed to some risk, you will typically go with a variable rate. On the other side of the equation, if you're risk averse, you just want to know exactly what you're going to spend, per month over the next 3 years or 5 years, whatever it might be, then you will typically go with a fixed rate. But the conversation is now opening up to is now the time for us to shift to a variable rate. And the reason we're having this conversation is I have a lot of buyers that are, we've been having conversations over the last 6 months, 8 months, that have just kind of been on the fence and just waiting for that time to jump in. And we've had conversations surrounding, over the last couple of years, when have been the time periods that were the best times for buyers to get into the market. And if you look at the last couple of years, the buying opportunities have been November, December, right? Where things typically quiet down a little bit. People are thinking ahead to the holidays. A lot of people don't want to move during the holidays. So the buyers that are willing to make concessions in these areas, they've typically found that they're getting better prices in November, December than they're getting January through March of the following year. And so when we have these conversations, and we know, rates are now, again, variable rates are getting much closer now to the fixed rate. For an uninsured mortgage, the gap is about 1 percentage point. So what's happening now is a lot of buyers are thinking, I don't really want to wait until next year. I don't want to wait until the spring market where We have another rate announcement in December. We have one in January. If we are to see cuts at both of those meetings, I think at that point it does fuel the market further. I think even after this 50 basis point cut, we're definitely going to see more activity in the market. I don't necessarily think that means prices are going to increase, but we're going to see more activity in the market. So what buyers are thinking now is, I really don't want to wait for those future announcements. I do want to take advantage of better rates if the rates are better next year. Like what do I do? And the answer to that for a lot of buyers is, I make a move today. I go with a variable rate, and then next year if rates come down further and I see an opportunity to lock in, because you can lock in a variable rate into a fixed, then I do that at that time. And so some buyers are thinking, okay, like if I were to make the move and I do that over the next 3 months, this would make a lot of sense, and then I can lock in whatever rate, if I would like to, into next year and avoid the busyness of spring market. Now, I just talked about how I don't believe that a 50 basis point cut today is going to push prices upwards in and of itself. I think certain product types are probably going to hover around the same price, and some are even going to drop further. But I think we also have to look at how the market typically differs in a spring market versus purchasing at a time of year right now. Right now, we're generally, I'll say, able to write offers with a week-long subject. That has come into question now, because a lot of properties that we're going to look at, if they're well priced, we're starting to see that they're getting offers on them. Some properties getting multiple offers on them. Again, they have to be well priced to get that sort of activity. They have to be in areas where there's not a whack load of inventory at that price, but it is happening out there. What happens when we get into a spring market is, again, if prices don't run up excessively, what does happen is people tend to write, we'll say riskier offers, but offers that have less in the way of subjects. Perhaps they're waiving the inspection subject that you would typically put in an offer. Perhaps they're shrinking down the financing subject to 3 days. So all of these things make it a lot more difficult on a buyer. So the savvy buyers right now, and again, I've been having conversations with some people, again, a lot of people from this channel over the last 6 to 12 months, just kind of picking the spot. Where's the spot going to be? A lot of the savvy ones are saying, look, I'm not going to wait until that spring market. This is the news I wanted to hear from the Bank of Canada. I'm able to get approved at today's rate. I have the buying power that I would like for the property I would like. And it's not making as much sense for people to wait any longer. When we look at prices now, like heading into next year, I said, I don't expect this major run up in prices, but a 50 basis point cut today, perhaps another cut in December, perhaps one in January. And now I think we can start talking about what this is actually going to do for pricing. Bank of Canada released their monetary policy report just this last week at the same time that they made the rate decision. And what they said is they expect home prices to rise, not just based on what they're doing with the interest rate, but also based on policies and changes in the market from a policy perspective put in by the federal government. And the one I'll talk about here, which I think will definitely have an effect at the entry level condo price. The lower tier, I would say, is 30-year amortizations available on insured mortgages for first-time buyers. So first-time buyers, a lot of them are purchasing a 1 or a 2 bedroom condo. And so now what they're going to be able to do is, rather than amortize that purchase over 25 years, they'll be able to amortize over 30 years. So being able to do that, their payments ultimately come down. Their buying power increases though. And most buyers, it's not that they're going to spend less, they're going to push that to the max. And so what I believe is going to happen is, if we see another couple rate cuts and this policy kicks in December 15th, I think that paves the way for entry-level product again to start moving up in price. And that typically will create an effect of prices moving up further. So that is it within the realm of possibilities. Again, I think certain types of properties, they're not going to see price appreciation, but there's a lot of fuel kind of coming into the market. I think from the Bank of Canada side, the government side, lack of productivity, lack of growth in the economy, I think it's been concerning. It's not something that they're coming out and outwardly saying, but we saw a sign of it with a 50 basis point cut where everything prior to has been that 25 basis point cut. So again, I think buyers now are, the savvy ones are wanting to get ahead of this sort of push. And I think January, February, March, we're definitely going to see a lot more activity in the market. And we're going to see buying power increase for those first-time buyers. They're going to utilize that buying power to get into the market. And, as rates come down even further, the variable rate mortgage becomes more attractive. Back in 2020, where a lot of people were taking out mortgages because rates were so low, this was the first time we saw a shift to a lot more buyers actually considering variable rates. Fixed rates have predominantly been about 75% of the mortgage share. But in 2020, things kind of shifted a little bit because they were able to get approved for more. When they were going to the mortgage broker, you could get approved for more because variable rates were so low. So in order to increase that buying power, they were getting approved and taking on variable rates. And then I don't need to tell you what happened with that variable rate. So the other thing we have to think about as well, when we're talking variable rates and what's going to happen to prices, is the stress test. Every time the rates come down, the stress tests get a little easier, right? The stress test where they basically test you at 2% above your contracted rate. As the rates come down, what they're testing you against for your qualification comes down as well. And so there are these stokes in the fire that are going to allow buyers to have more buying power. The message from the Bank of Canada is if things continue as they expect it will, they see further rate cuts in the future. And so I think activity-wise, we're definitely going to see more action, if you will, in Q1 of next year. All right, so I want to just cut over real quick to the BC election. I was hoping by now that we would have the election results by the time I recorded this video. I can't remember an election actually where we've had to wait so long to figure out who the winner might be. As of you watching this video Saturday morning, I'm not sure if we'll have the results now, but what it is looking like is it's sounding like the NDP will form government and the Green Party will carry 2 seats. And I want to mention this specifically because those 2 seats could actually prove to be very powerful when it comes to swinging the votes and basically controlling what happens in this province. Believe it or not, those 2 seats are the difference maker. As of right now, the BC Conservatives have 1 less seat essentially than the NDP. So you can see how those two seats become very important. You guys know me, you know this channel. I don't like to go into politics, and I generally don't. What I do want to talk about, though, is from a housing front. What might happen if this is the case from a housing front? And so in order to do that, I've been looking much more at the Green Party policies. Truthfully, I didn't spend a lot of time on that in previous videos leading up to the election because I just did not think it would be a factor. We were looking at the BC Conservatives, we were looking at the BC NDP. Now we need to look at the Green Party because they all of a sudden could potentially hold all the power really to make things happen. And so what I'm about to share with you is a scary thought, what we could see. NDP has already come out and said we want to talk with the Green Party about a coalition coming together. Just as a sidebar, I think coalition governments, I don't think they should even exist. No one voted for a coalition government. So to come out and say, we're looking at coming together and working together, forming a coalition, it's basically saying we're looking to do something that you never wanted. You that voted us in, you didn't want this, but this is what we're going to do. So that's a sidebar. I don't think coalition government should be allowed. But anyways, if the NDP and the Greens were to come together in some sort of way to support each other through the House, I went through the green policies and their big one that they've been on about for over the last year is vacancy control. And there's been rumblings here in BC, even with the NDP party, that they had been looking into vacancy control. What this is, how it differs from rent control. Rent control controls how much you can raise the rent on a tenant each year. Vacancy control would control your ability to raise rent when your tenant moves away and you have a new tenant come in. Right now, if you have a tenant leave and you put a new tenant in, this is your opportunity to catch up on rent. This is your opportunity to charge a market rent and perhaps get paid back for some of the below market rents you've been offering for some time. Now, if vacancy control were implemented, that would mean if your tenant leaves, you could only raise rent a certain percentage on the new tenant from your last rental rate. And so on the SRO front, single residential occupancy front, they've already implemented vacancy control kind of quietly. It hasn't made too much mainstream noise about it. But in fact, I had someone message me on TikTok who's a stakeholder whose family owns SROs and said, look, what do you think is going to happen surrounding vacancy control? Is this something we're going to see? And so when you look at the green policy, they're heavy proponents of vacancy control. NDP are heavy on the rent control. Vacancy control has, been announced for SROs. You start to wonder now, is this the big policy that the NDP and the Greens would come together and put into the market? I would hope that the NDP would realize how horrible this would be for any sort of property rental investment in the province. And when I say rental investment, I want to specify not just mom and pop investors who they seem to not be for, but also for people that are building purpose-built rentals. That one saving grace is when your tenant leaves, you can catch up the rent. Imagine a scenario where vacancy control comes into this province and you can never catch up your rent. You'll literally never be able to catch up your rent to market value. So when I look at, again, the green policies, the NDP policies, not that they're exactly aligned on that policy, but vacancy control and rent control are related. They're cousins, right? And so, do we see vacancy get rolled out? Will it be specifically on multifamily type housing, maybe 5+ units? Will it be across the board? Will it be at all? Again, I hope the NDP realizes how bad this would be for money invested in Canada. We're already seeing money shifting out of, BC. We're already seeing money shifted out of BC all over the place. People investing in Alberta over BC happening all the time, investing in prairie provinces over BC all the time. And so if something like this were to be implemented, I guarantee you rental investment would just absolutely tank. And that means builders not building, not building pre-sales, because we know that investors purchase the large chunk of these pre-sales. Renting out is not obviously option A all the time. Sometimes it's option B. But if option B stinks, if option B doesn't make sense, if your backup plan doesn't make sense, then your plan A becomes weaker. So let's just hope that this doesn't happen. I hope I know by the time I do the next video, we'll know how the government will form. Definitely be talking about that in next week's video. So there you have it, guys. I hope you enjoyed this week's video and you learned something. If you did, hit the like button, because what that does is it takes the video and it sends it out to more people so they can also learn from it. And if you enjoy weekly real estate content like this, subscribe to this channel so you don't miss next week's video. And lastly, again, if you're in the Vancouver area or the Fraser Valley, you want to chat with me one-on-one about your real estate situation, you can book me for a free call, or you can just give me a call, send me a text, shoot me an email. All my contact info is in the description box below. But I want to thank you again for watching this week, and I look forward to seeing you next week.